I'm working on page 166 in the accounting book. It's problem 41A. And the trial balance is now part of the worksheet. And so the whole worksheet is on the screen right now. I've got the account names. Here's the trial balance, the debit and credit. And remember, the debit total has to equal the credit total. And notice that there are some additional sections here besides the trial balance. There's the adjustment area, the adjusted trial balance, the income statement, and the balance sheet. So what the worksheet is used for is to bring certain accounts up to date that aren't going to be generated because of source documents. Examples of this would be insurance that you've used up, or depreciation, or maybe even accrued salaries. So what we're going to focus on in this one today is insurance that's been used up and also equipment that's been depreciated. So I'm going to increase my magnification here just so you can see a little bit better. And I have the name of the company, Morgan's Insurance Company, worksheet, and it's for the month ended September 30th of this year. Here's the trial balance, similar to what you've been doing at the end of chapter 3. Now we're going to plan what we need to do to certain accounts to bring them up to date. And so to do that, it says in 2A, expired or used up insurance. So during the month of September, we have used up $300 worth of insurance. Our prepaid insurance has now lost value, $300 worth of value, and the amount that we have used up represents our insurance expense. So we have to show a debit to insurance expense. So I'm going to go down here, I'm going to skip this line because there's a total, but I'm going to go here, and we're going to write insurance expense. Now, we label our adjusting entries like A, B, C, D, E, etc. And so this is going to be our first one. So this is the A debit, and it's going to be for $300. So we are planning that we need to debit insurance expense for $300. Now we need to make this prepaid insurance up to date by decreasing it for $300. So now we're going to go to the credit, and we're going to credit prepaid insurance to decrease it. And this is also still transaction A. It's the first adjusting entry. Notice that the A debit equals the A credit. Going to letter B, the depreciation expense on office equipment. Now, when you record depreciation, it's an expense, and there's no depreciation expense up here. We're going to have to go to the next available line, and we're going to write depreciation expense office equipment. This is an expense account that's increasing by $750. So to increase an expense, you would debit it. And this is the second adjusting entry, so that's going to be labeled with a B. Now, office equipment, this is how much we've paid for it right here, but now it's lost value. We're not going to credit office equipment. Excuse me. Instead, we're going to use a contra asset account called accumulated depreciation office equipment. So I'm going to write that down here. It's a brand new account, it's contra asset, and it's a contra asset, so assets are plus minus, contra assets are minus plus. So this account is going up by $750, and so the plus side of that is the credit side. So here's your B debit right here, here's your B credit right here, and they equal each other. There could be several adjusting entries. In this case, there are just two. So what we're going to do is we're going to draw a single line up above where I'm at here, and we're going to total these. So what you see there, those totals should agree, and we're going to single line above and double line underneath. So this is our adjustments columns. At some point we will take these debits and credits and write them in a journal and then post them to the accounts. The adjusted trial balance is where you combine trial balance activity with adjustments. Looking at cash here, cash is it has a debit here, but it has not been adjusted, and so we're going to just bring that total over here. So this is combined with nothing. This is why it's just brought over. Looking at accounts receivable has $1,428. It's not been adjusted, so we just bring that total over also. Prepaid insurance started off with a debit of $775. Now we're crediting it for $300. So if you credit a debit, you're going to have to subtract, and the difference is $475. So this is the new balance of your prepaid insurance. Now it's brought up to date here on the adjusted trial balance. Office equipment has a debit balance. It has not been adjusted here, so it just comes over. Same thing. Accounts payable is here, no adjustment, so it's brought over as a credit. Capital has not been adjusted, it's brought over as a credit. Drawing has not been adjusted, it gets brought over as a debit. The revenue account commissions earned has not been debited, so it gets brought over as a credit. Rent expense has not been adjusted, so it comes over. Supplies expense is not adjusted, it comes over. Travel expense comes over. Miscellaneous, utilities, and miscellaneous all get brought over. Okay, and then we need to keep going here because we have insurance expense that had nothing here, but now there's a debit here, so this $300 needs to come over there. This expense account here needs to be transferred over here. And this contra asset account here, this credit needs to come over here. And then we're going to draw a line, and what we're going to do here is total both columns, and they should equal, and we're going to put a single line above and a double line underneath. So when we went from the trial balance to figuring out our adjusting entries based on passage of time and depreciation and things of that nature, and then in the adjusted trial balance over here, we combine the figures that were in the trial balance with what was in the adjustments column. So that's where this comes from. Okay, moving ahead here, the next part of the worksheet is the income statement, and then comes the balance sheet. What's going to go into the income statement will only be revenue accounts here and expense accounts here. So all of these assets, liability, capital, and drawing will not go into the income statement. They're going to go over here in a few minutes. So the revenue, this account here, is the first income account, so it's going to go into the income statement credit column. All of these expenses get transferred in to the debit side of the worksheet. This account down here is a contra asset, so it's going to go way over here. It's not an expense, nor is it a revenue. So I'm going to put a total in here, and what I'm going to do is total up all the expenses. I'm going to total up the revenue, which is only one, and then put it here. And these columns should not equal. If they did equal, it would mean that you did not have a net income or a net loss. It just means you broke even to the penny. Okay, looking at the balance sheet, what's going to go in the balance sheet column over here will be assets and drawing. Okay, so your assets for cash accounts receivable, prepaid, insurance, and office equipment, they're all brought over. Your liability is brought over. Your capital is brought over. And the drawing is brought over. The expenses and revenue don't belong in the balance sheet part, so they do not go here. They are strictly for the income statement part. Now down here, this last line was our contra asset account, so that does go in the balance sheet. Now what I'm going to do here is total both columns. And again, your answers here should not match each other. As we continue on here, we're going to look at these two numbers right here. These two numbers. 3,102 represents the total expenses. 2,843 is our revenue. So since the expenses are greater than the revenue, we have a net loss. When you look at these two columns, you find the difference. You subtract the difference between the two, and you're going to write the difference under the smaller of these two totals. The difference was $259. That actually is our net loss for the fiscal period. And then we're going to draw a line, a single line before and a double line after what I have in green here. You're going to add this to nothing and get 3102. You're going to add the revenue and this net loss together to get 3102. Now this is just out of tradition. This is just the way you finish off worksheets. Again, subtract the difference and put the difference under the smaller of the two totals. As you look at these two columns, 11,386 is your assets and drawing. This 11,646 is your liabilities and your owner's equity and your contra account. Notice that the left column is smaller than the right column. If you subtract these two numbers, you should get the same number that you got when you subtracted these two numbers here. So again, we're going to draw a single line above where I have the green and a double line underneath it, and the numbers that are going to go there are 11,686. 386 plus 59 equals 11,645, and then this one added to nothing is 11,645. Notice that this line here where you have the net loss, we're going to go over to on the left side and we're going to write in net loss, and that ends this particular video.